Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and or investment strategies recommended and or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
The following program is pre-recorded on AM 1420. The Answer. Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Welcome back, everybody. Hope things are going well for you. I was just reading about how dismal the outlook by individual investors are these days. Everybody's really upset, and we've actually had one of the lowest level readings in decades. So that's kind of interesting because when you look around, if it weren't for the pandemic and the supply chain issues, demand's still there and economies are still growing all over the world. So it's not a lack of demand, that's when you want to be really worried, when people just don't want to buy anything or they don't want to spend any money because they're super worried. That's not the problem. The problem is a lack of supply. And that'll slow things down, and you probably see the Fed. They may raise interest rates again this year in maybe a couple different times. So my advice to that, if you're looking at it, if you're investing, if you're getting close to retirement, you're wondering about maybe what you should do, I would use, for bonds, I would either use a super short-term bond fund. You're not going to make much money on it, but it's not going to drop like a rock either. If they do start raising interest rates, or you just buy some short-term treasury bonds, and those give yourself 2-3 years at the most, and then in another 24 to 36 months you can take another look at it, and we can see where we are at that point in time. So I think those are really good strategies, and the fact that stocks are down is actually a good thing. If you're thinking about buying low and selling high, second segment in today's program, I'm going to show you how to do that without having to know where the market's going. And see, that's the number one problem that I see. And I would have thought by this point in time, I've been doing this since 1988. Okay. That's how old I am. And I got into the industry. I wasn't in right out of college, so I had a couple other jobs before I started doing this. And by the way, I didn't go to college. I didn't have parents paying for that because we couldn't afford it. I had to go on a football scholarship, and back in those days, we were 50 hours a week, 10 months out of the year. You got 2 months off at Christmas and 6 weeks off for summer. And I always took the abbreviated 6-week summer school classes because I would take 18 to 20 credit hours, because it was the only time I had time to actually put a lot of time into the homework. And so actually the only time I ever made the dean's list, because I didn't have to play football. Now think about that. So you're going to take your courses in 1/3 of the time. You get 1/3 of the time of normal semester, and your grades go up substantially. What does that tell you about what you had to do in the regular school year? Yeah, it was brutal. And back in those days, only 1 in 5 college athletes who were on scholarship ever graduated. And the reason being is the sport. and it was gymnastics, it was volleyball. I think other than the physical, the injuries, the girls' volleyball team there at Kent State, they put more hours in than we did. I felt so sorry for them. It was mind-boggling how much time they had to spend on that sport. Anyway, so I'm glad that they've got some rules that have changed that today. But and it made it to the point where I really wanted to pay attention to this economic thing. I was thinking, here's my thought. This is a 18, 19-year-old kid trying to figure out what he's going to do in his future, being worked to death, and a whole bunch of other stuff. But anyway, I thought, you know what? I'm going to take this economics class because it sounds like I'll learn how the economy works, and maybe I can figure out what rich people do. And you know what? I was right. It really helped a lot. And I took a whole bunch of finance classes, minoring in finance, and actually I think I was really general studies because I was in arts and science. I just loaded up on both those classes, those subjects. And interestingly enough, in the United States is the only country, or was the only country when I was going to college, that taught economics as a standalone science. Every other country teaches it as political economics. And I have to tell you, I have to hold my tongue so many times. I hear so many people that want to bring politics into the economy. It's the president. No, it's not. The president's got 1/3 of the vote. 1/3. You still got to get a majority out of the Congress and the Senate, and it's a great system, despite the fact that nothing is perfect. It's a whole lot better than a dictatorship. Ask the people that live in Russia, how they feel about a dictatorship. So anyway, nothing's absolutely perfect, but I think it's pretty good here. We have pretty good lives relative to a lot of the countries around the world, especially one that's got as many people as we do. But anyway, and I see a lot of really positive stuff. I mean, so many things are going on, and it's being overshadowed by the bad news. And they're accentuating the bad news because that's basically what sells ads. And unfortunately, in a capitalist society, you've got to get out there and sell stuff to make a living. And the easiest way to sell ads is to, accentuate negative stuff, going for the shock value. You have to take that into account when you're reading something or listening to something. And there are very, very, very few new stories. Most of the stories are old stories that are being recycled and changed just a little bit. And if you haven't been watching it for the past 30 years, you probably wouldn't notice, and which is why a lot of people are still falling for the same stories that they fell for 30 years ago, because they were just being born. And nobody goes back to read history or look at all that stuff. It's kind of hard now. Well, it's not hard. It is hard because you can Google stuff and you can find old stories and you can do a lot of research that way. It's just not the same. Yeah, it's just not the same. If you were to go back before the internet was here, you used to go to the library and they used to have all that stuff on this thing called microfiche. And so that's what I would do. I would go back and I would look at the old newspapers, and a Cleveland Press, Cleveland Plain Dealer. Those were the local Googles of their day. Anything that happened, and you had a bunch of local newspapers that also would get to your specific high school or your specific city. So we're doing the same things, just a little faster today. And there are more contributors because back in those days, I mean, if you didn't own a newspaper publishing company, how'd you get your story out there? It was pretty difficult. Today, you can just throw up a YouTube video and, get, if you're lucky, you get a whole bunch of views. And anyway, back to what I was talking about, the interest rates. If interest rates continue to climb, it's going to make bonds more attractive than stocks are. And that's one of the reasons that stocks have gone down. One of the things that I thought was always interesting from my finance and economic classes and actually just observation over the past 30 years, which is way more valuable than my college education was, by the way. That was a good start. It was a really good start. Gives you framework to try to watch things and try to understand things. But when you see and you experience and you're watching what's actually happening, it's pretty fascinating. You know how you'll know more often than not when a recession is over? Because the stock market will be up more than 20% from its most recent low. Now think about what I just said. Stock market will be up 20% or so from its most recent low. Okay? That's how you'll know that the recession is ending, because the news oftentimes will still be really, really negative. And everybody's wondering, why is the market going up? Well, because in my opinion, there are an awful lot of really smart people that manage money. There are some big institutions that manage money that this is not their first rodeo. They know that the stock market is generally a leading indicator. They know that they're one of the people that are responsible for it, and what they're doing is they're looking and forecasting and sending people out into the field and watching. These days, it's probably with drones, the ships, and when the line starts to move a little bit faster, when those ships are not parked outside in the Pacific or the Atlantic Ocean for as long as they were the week before, and maybe if it's only by 4 or 5 days. 4 or 5 days will save you a lot of money, especially if you're shipping over a whole ship, a container load, or shipping a shipload full of Audis. You get a bunch of Audis at 5 extra days, that's money on the clock. Probably doesn't seem like much to an individual, and it's not on an individual basis, but you take that times a few 100,000, yeah, that's a lot. So getting that stuff through as quickly as possible, that's kind of a key. Keeps your costs down, especially when you're talking about groceries or fruits and vegetables that are imported. 5 days, they could literally like rot over that, and they are rotting the whole time. So, I'm really getting off on tangents here. Sorry about that. But so the bottom line is, I still get people constantly after 30 years. Has it been 30 years? When's 1996? So 2006 would be 10. 2016 is 20. Well, so it's only been about 24 years. Feels like 30. So for 24 years, I've been talking about this. And I'm still getting the same questions that I got 24 years ago. And I couldn't figure that out. I figured it out several years ago. But it still amazes me that I still have to go back to the basics and remind people that this is not the end. And this is the beginning of a new beginning. And in the future, life is going to be easier. I promise you, life is better for all of us today than it was in the 1970s. A lot of people still didn't have air conditioning. I know, because I lived in a couple of houses with no air conditioning. And a lot of cars. We didn't have air conditioning. You rolled the window down. That's what you did. Yeah, in the wintertime, you just cracked your window. But the cars got about 8 to 10 miles a gallon. And I remember when gasoline prices went over $1 a gallon, I was like, what? Yeah, I think I was about 16. And everybody thought that, that is crazy, because 18 months ago it was a lot lower. I hear the music. That means I got to take a commercial break. This is Bill Bullington here on 1420. Stay tuned. I will be right back.
Is there anybody sunshine been turned to rain? Is there anyone's blue sky been turned to gray? Is there anybody's good time turned out real bad? Is there anyone's happiness turned out sad?
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
From an idea that started in 1967, Our Lady of the Wayside has grown to serve almost 900 children and adults with developmental disabilities throughout Northeast Ohio. It's an operation that is still growing thanks to tremendous support and generous donations like the Wayside's car donation program. You can donate your ride to the Wayside for a great tax write-off by calling 1-800-368-6262. The Wayside is also looking for people to join their team. They hire for attitude and train for skills. Visit thewayside.org to apply today.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
AM 1420, The Answer.
Wait till Goddard sees my woolly bear.
Celebrating 100 years in Cleveland.
The other day I was thinking to myself, made a list of all my mistakes. Oh, I wish I could have run to you and tell you all about my heartbreak. And I wondered to myself, wait a minute, am I even on the right path now? Had a couple wins, but I got knocked down. But I know that you are here right now, and you say, ooh, sometimes you lose, sometimes you win. Ooh, you gotta get up again.
Wow. That song's appropriate. I can't even speak this morning. Oh, so, hey. You know what? I feel bad. I feel like I got off to a kind of a rough start this morning. You know, I don't want you to feel bad. I want you to feel better about the economy. Yeah, I see what's actually going on. You know, one of the things if you missed getting in on semiconductors, you know, that's one of the models that we have. When we overweight that a little bit, it's basically 10% of the stock allocation. So it's not huge. But it's also in a lot of the other exchange-traded funds that we own. And I'm telling you that the growth there, the demand for that product is at the highest of the world. There are so many shortages. You know, it's slowing down the production of cars, for example. And it's mind-boggling. So I think that's a layup. It's actually down about 27% from its all-time high that was reached back in January. And, of course, when you go into a single industry, a lot of time the single industries are more volatile than the overall market is. And it's only down, it's within a few percentage points of what that is. And since then, since the bottom of July, it's actually up about 20%. Okay? So and that's one of the indexes. That's actually semiconductor index. And there are several funds that you can invest in that hold every stock in that index. And I really think if you're looking out over the next 5-10 years, you're going to look back and go, wow, that was a good one. But that's my opinion. We're not allowed to guarantee anything like that. Why do I feel that way? Because semiconductors are getting into everything. I mean, they've been doing it for quite a while now, and it's not slowing down. I mean, it's expanding. So I feel like that's a really good addition to somebody's stock portion of their account values. And should you be 100% in stock? Only if you're 40. You know, or if you're under the age of 50, then I think you could technically have 100% in stocks, and that would be okay from a risk return standpoint. But you may not be able to take it psychologically. If you're not willing to be down 50% or more in your stocks, you shouldn't buy them. And I've got this methodology. I've seen all the methodologies that Morningstar, that got sold for billions of dollars a bunch of years ago. I've seen their questionnaires. I've seen a gazillion questionnaires. None of them ever actually seem to address the point that the stock market can be down 50% or more. And if you're not prepared for that, that's one of the reasons people do so poorly, because they didn't expect it. If you were reading one of the world's largest asset managers' publications and you saw that the average fluctuation was only 16%, you would be thinking that 16% is probably the worst I'm going to be down, right? No, that's not. You got to read the fine print. And you actually have to understand that they substituted standard deviation. They substituted the word fluctuation because they think more people can understand it. I understand that part of it. But you look at fluctuation, an average fluctuation, which is the same thing as standard deviation. Same thing. A little math concept for you there. But so the average fluctuation being 16%. Well, the average, what happens when it's above average? They don't talk about that. They didn't address it at all. Okay. So I know why. They're afraid that nobody would invest. And my thought process was, and will always be, you should let people know what they're up against. You owe that to your investors to let them know, look, if you've got 70% of your money in stocks in some way, shape, or way, now I'm going to say stock funds. Individual stocks are even more volatile than that, by the way. But so if you've got a stock fund portfolio and you don't realize that you can be down 50% on that stock account, then you got another thought coming. And all you got to do is live long enough. We'll go through it again. It's happened multiple times, and it may happen now. I don't know. And that's the other thing. No one knows. You cannot forecast that. If you could forecast that, okay, it doesn't even have to be highly accurate. Just get me within 2 weeks of the ultimate bottom. You get me within 2 weeks of the ultimate bottom, I will show you how to become a billionaire. Now, that should give you some idea as to how difficult that is. The fact that we don't have a whole bunch of billionaires walking around. You got people around selling systems and software and newsletters that tell you that they know when to do that. And if they actually did know how to do that, they wouldn't be selling newsletters or software or trying to get YouTube views. Okay, they just wouldn't need it. They wouldn't need the money, and that would be such a great secret they wouldn't want to sell it anyway. Okay, so the reality is, you really don't know. What you can know is what's going on right now. That's what you need to pay attention to. What's going on right now? All the testing I've ever done when I was rebalancing the portfolios between stocks, bonds, and cash, the best period came up was every other year. It wasn't every year, wasn't every 6 months, wasn't every month. In fact, all those other time periods ended up doing worse than doing one every other year. Okay. Does that mean that that's a gold standard? No. I know enough about statistics to know that could be an anomaly. But so anyway, in that case, your guess is going to be as good as anybody's on the planet as to how frequently you should rebalance. All I'm saying is that it has a tendency to not be needed to be done nearly as much as people might think. And a once a year, once every other year rebalancing. If you have an event, I don't know, if the market were to crash, if it were to go down more than 10 or 20% in less than a month, that's where I would start raising my antenna. I would start to want to buy into that. Now, most people that heard me say that, it's down 10 or 20% in less than a month, they're thinking, oh, you should be selling. No. You should be, if you look at every time that's happened on a graph, that's happened somewhere within 10 to 15% of the ultimate bottom, except for the depression when it went even further down. So even that's not foolproof. But more often than not, when you see a huge drop and you look at the volume, and the volume is spiking, you can see an average daily volume, and the volume's 6, 7, 8 times its normal daily volume, you're probably within 10% or so of the ultimate bottom. You might be before the bottom or after the bottom, but you'll probably be within 10% or so. And that's worked out about 85% of the time, which means there's 15% of the time it's not going to work. But if you were going to do something, that's what I would look for. And it's called the washout. And I'll show you that the very next seminar that we do. We'll probably be doing one in October. So I'll just announce that right now. I'll show you what that's like. They don't happen very often. It doesn't happen very often. And again, nothing is 100% accurate, but the probabilities, the odds are in your favor if you're looking for that, especially if valuations are not super, super high. See, if you'd have done that in the year 2000, well, that market didn't actually bottom until 2003. Yep. So 2001, 2002, and all the way into 2000, it was 3 years the market was declining. And it was down a little over, the S&P was down a little over 50% during that time period. So, but the thing is, it's come back. And it'll always come back because that's how the system is made up. It's how it's set up. Now, how quickly it comes back depends on a lot of things that happen with the Fed. The government can assist. They came to the aid of the public with cutting all those checks when, the supply chains were really shut down. I mean, people had money, couldn't buy anything, but well, you could if you got there real early when they got a new shipment. It was challenging. That when they say it's different this time, that was really different. That's the first time I'd ever experienced anything like that. Although I had heard about stuff like that from my grandparents during World War II. But anyway, so every time it's a little bit different. You don't have to know what's going to happen next, though. What you do have to know is what you're going to do in response. And you should decide that up front. You should decide that up front. What kind of volatility, what kind of fluctuation am I really willing to accept? Because I can look up all the funds and by the way, the funds that have been performing the best over the past 5 years, they're growth funds. The growth funds have been performing best. Value funds have been lagging. You go over the past 10 years, it's growth funds. You go back over the past 40 years, toss a quarter. They're within 1% of each other. So you hear a lot about that too. Growth and value. Oh, we know exactly when. And I used to do the sector rotation. I have to tell you, it doesn't work nearly as well as it used to. It's not horrible. You'd still be in the top 50%, but if you want to stay in the top 5 or 10% of your categories, you probably need to use something that's got a market cap weighting plus a couple of other features that deal with valuation. I'm going to start talking about those next week, like those things, and we're using funds that incorporate that. That's why I'm incorporating it, is because it's been shown to work very well if you give it enough time, and you got to be patient. Time and patience. Well, it's a lot easier to be patient when you have time, by the way. And one of the problems you can get into when you get into retirement is if you're taking out, 5, 6, 7% a year, and then the market crashes, and like it did in 2000 through 2003, it's going down 3 years in a row. So not only is the asset base dwindling down, but you're taking money out of it 3 years in a row. That's what you got to be on. You have to watch out for. That's one of the reasons I'm not a huge fan of just doing market cap weighting. That means just putting more money in the bigger stocks and less money in the smaller stocks. Some of those smaller stocks are going to be the next Google. Some of those smaller stocks will be the next Microsoft or the next, I guess Walmart's been doing pretty good lately. All these stocks, by the way, have had periods of more than 10 years where the returns were negative. So that's what I'm saying. I'm not saying they're bad. I'm saying you just have to be careful. You've got to be careful. You need to really give a lot of thought to what kind of a risk taker am I really? Where do I go? When do I start losing sleep at night over my investments? All right, it's when they're down 10%. If they're down 10%, you're losing sleep. Well, you're not going to make much money, okay? Because you can't put more than 20% of your money in stocks. You put 20% of your money in stocks and it drops 50%. Well, you're only down 10% overall. See how that works? Super simple. I'll come back and review that in a little bit, but I got to take a quick commercial break right now. This is Bill Bullington on 1420. Stay tuned. We'll be right back.
got that good news smile on my face. I got that feeling that the world can't erase. There ain't a single day I let go to waste. I got that good news smile on my face. I got that beat, beat, beating in my heart. I got that gospel song rocking in my car. A little light gonna get me through the dark. I got that beat, beat, beating in my heart. All joy, no stress, no worries. I'm blessed from early in the morning.
Now let's be honest.
Aren't we always honest? We say we're straight talking plumbers.
I meant bluntly honest.
Okay, gotcha.
If you're a first-rate plumber, you can write your own ticket to work anywhere you want.
And we want you for why it works.
So here's why you should choose us. 1, no on-call.
Because family time is sacred.
2, family first, and we'll work with your schedule.
What good is raise a family money without quality time with the family?
3, we've got a truck waiting for you.
And it's a sweet rolling warehouse of a truck.
4, mom's breakfast every Tuesday.
And it's so good.
6, we're growing, and you can grow with us.
You want to move up? You can with us.
7, we'll teach you to Wallackadoodle.
And we'll teach you how to spell it.
8, no on-call.
You already said that.
Well, because it's important. 5, work with the best plumbers and for the best customers in Cleveland.
Oh, that is a biggie.
Yeah, I should have put that first.
Or at least between 4 and 6.
Anyway, if that sounds good to you, hit us up at
WyattWorks.com.
License number 30185.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
History was made on today's date. Stay tuned for an American Minute with Bill Federer.
He was the only person to sign all 4 of America's founding documents: the Declaration of Independence, Articles of Confederation, Articles of Association, and the U.S. Constitution. A shoe cobbler by trade, he was also a surveyor and merchant prior to his political career. As a congressman, he helped write the First Amendment, and at age 70 was elected U.S. Senator. Who was he? Roger Sherman, who died this day, July 23, 1793. When the British had surrendered over 5,000 troops to the Americans at Saratoga, Roger Sherman exclaimed, "This is the Lord's doing, and marvelous in our eyes."
This has been an American Minute with Bill Federer. For a free transcript, call American Minute at 1-888-USA-WORD.
Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit JoyceFactoryDirect.com.
You made the rain, so when it falls on me, should I complain or feel you're calling me? It's all on me to stay and really catch what you're showing. It's my roots that you're growing, 'cause life is more than this moment.
You are the light, so when the darkness falls, the greatest heights, they never seem so tall, no, not at all, you're right. It's my roots that you're growing, don't want to miss what you're showing.
Ain't no doubt about you. Everywhere that I go, you keep showing up. Lord, you make me wanna shout it. Oh, you're the goodness in my life. And I will tell you my truth. They may come.
And welcome back. Hey, this is Bill Bullington. I'm here every Saturday morning from 11 to noon. I hope you guys like this show. If you feel like you've got questions to ask, you can go to my website at bullingtoncapital.com. You can either submit a question there on the Contact Us page, or you can just call me. And the number's out there. It's 330-664-0700. And if you can't tell, I really like this stuff. And it's a challenge. And, you know, there's some weird part of my personality that I've been this way my entire life. You show me two ways to go. One looks pretty easy. One looks almost impossible. And I'm going, yep, the impossible one. That's where I'm going. I hate that about myself, too. It's wow. It's a lot more work. But oftentimes, it pays off. So one of the reasons I'm so confident in this system is I was really, when I first started in the industry, I really didn't know that much. And even though I'd taken all these classes in school, you know how that goes. Right after the test, you forget half the material. And I never had to apply any of it. Okay, so now when you're applying it, and then you're applying it for a couple of decades, you're like, oh, okay, I get it now. And that's why I'm not upset. And that's why I'm very optimistic. I mean, right now, I thought things were growing really fast in the late 90s when everybody was getting internet access and cable was, still, a lot of people still didn't have cable. I thought that was fast growth. That is nothing. I'm telling you, that is nothing. Well, first of all, if the population grows by 3% a year over 20 years, with compounding, your population's about 70% larger. 70% of a couple 100 million people is a lot of demand. Okay, and even when they're babies, the babies require actually a lot. The diapers, you hear all about the shortage on diapers, clothing. My kids ate a lot of food. I'm sure most of yours do too. Now I got grandkids. Woohoo! That's a lot easier, by the way. So, and you see all this stuff and everything that you hear in the media, that it was around then. There just weren't as many voices. You didn't. The internet wasn't nearly what it is today. Mostly cable TV. CNN was like super popular. And you had media outlets. They just weren't up in your face 24/7. And that's what you've got. And I'm not surprised that people are reacting more outlandishly than they did because, they're being scared more often. And you used to be able to turn that. There were no cell phones. They were car phones. People don't remember that. Do you have a car phone? And they were bulky. They were big. They ran off the car's battery, the electricity. That was the, yeah. And Josh is holding up a regular telephone and going, look, regular telephone. Yeah, I forgot about that too. I haven't had I can't even tell you when I've had a landline. We have them in our office, but they're actually hooked up through the internet. They're IP-based phones. So little computers on our phone systems. But it's just amazing when you think about all that change. And when I read about the change that's coming, it is awesome. It is, I'm telling you, as good as my life is today versus what it was 30 years ago, it's going to be double that in the next 30. I promise. And I was going through pictures of my grandparents. And I'm looking at them and I'm thinking, wow, look how old they looked. And I wonder how old they were in that picture. So the picture had the date on it, and I looked up their birthdays, and I'm going, oh, holy cow, they're my age. My grandparents were my age in that picture. They looked like they were in their 80s. I mean, that's and I looked at, so I got interested. I started looking at other pictures and family albums and looking at what ages people were, and holy cow, I mean, we have better lifestyles today than they did by far. You hardly ever hear of people who don't have access to air conditioning. And, your cars have air conditioners in them, all of them. Back in those days, that was an upgrade, and you had to pay dearly for it. Actually, my grandparents didn't have access to that. I did. But I never wanted to pay for it probably 4 or 5 cars that I purchased. But so you think about that, and the fact that you can actually watch your investments in real time, that is one of the worst ideas I've ever seen. I promise you. And I'll take anybody's bet on this. You put people in a room, show them their stock portfolios, and just play it like twice the normal speed. In a week, you're going to get at least 1 or 2 gasps out of it. In a week. And they don't think about that too often. They just react. And here's something for you to kind of help you with that. When you're thinking about reacting, convert the declines or the increases into percentages, not points. Percentages. I can't tell you. People call it, the Dow's down 300 points. It's at 31,000. 300 points is nothing. Now, if it were that's basically 1%. So when you say, well, how much is it down on? Well, it's only 1%. Oh, all right. Let's go fishing. Your mindset almost automatically changes. And I'm sorry if my laughter offends anybody. I'm not making fun of you. I'm actually making fun of me because I used to think the same way. And it took me a while to figure out that, hey, wait a minute. Worrying about this is not going to help, first of all. Secondly, there are lots of reasons for markets to go up and down all the time. Over the long run, they're going to go up, especially if the Fed keeps printing money. Now, I won't bore you with the explanation of that. I'll save that for next week. But if the Fed stops printing money, then we've got problems. Okay, those are big problems, and they are also aware of that. So, and the idea is to try to not heat up inflation too high. That's what they're trying to do. The reason they're raising interest rates is trying to keep a lid on inflation. And I hope they're right. In this case, the reason is that they're doing it have never really existed before. So this is a grand experiment, but sooner or later, it will get back to normal, and there is an unbelievable amount of stuff, innovation that's been happening. It's one of the reasons we have so many shortages on semiconductors, because they all use semiconductors. Everything uses semiconductors today. All your testing equipment's computerized, all of it, and they have to store that data somewhere. They've got to have help interpreting that data with their other software packages. So, it's just, to me, that's an easy one. The other one that's easy is healthcare, and it's taking it on the chin too. And, you got all around the world, the fastest growing segment of the population is 60 and over. You think people get healthier after 60? Really? They don't. So the demand in that area is huge. It's one of the reasons that their revenues have still grown pretty substantially despite, the shutdowns and the supply chain issues. I'm telling you, once this stuff subsides, that it's going to flood and demand's going to be good, and they're going to be feeling like they did, in the technology stocks in the late 90s. So if you don't know what that is or don't remember that because you're too young, you're going to get to see it again. So don't worry about it. All I can tell you is that it's going to do quite well for all the companies that are in those industries. And the people that work in those industries, they buy clothing, food, they pay for housing, they put their kids through schools, and they're consumers, in other words. So as one area of the economy starts to grow, it literally spreads out to all the other, and it has an effect on all the others. And that's a good thing. And I see all the projects that are going on now, and not government projects. Government is actually less than a third of the total economy. It's about 30%. That means 2/3 is private industry. No. How do you feel about that? Everybody always thinks that it's all government. No, it's not all government. Government's a smaller part of the total economy. The largest part of the economy is private enterprise and people working and paying their bills. And that's a beautiful thing. And as long as the Fed still stays there, keeps their eye on things, tries to control the money supply the best they can, that's the other thing. That the Fed is allowed to make decisions, and then they're allowed to change course when they see that they should be changing course. It's kind of like flying a massive jet. If you're in a massive jet and all of a sudden some unexpected turbulence shows up, you can move to a different altitude. You can go around it. You can make an adjustment. Okay? That's very similar to the way the economy works. You get some unexpected things happening. You can make adjustments. That's the beauty of the whole thing. You can make adjustments. None of that stuff is in stone. And even if it's in a law, you can get the law changed. Actually, you can get permission to take action without even changing the law, and then go get to that later. So we've got the ability to self-heal. And that is a really good thing. One of the other really good things is if you're getting close to retirement and you're like, I got to get some income and I really don't want to put that money in the stock market. I understand that completely. And that they've been insurance company, they invented products to help meet those needs for people that feel like they would like to have a higher level of guarantees, and especially on their income. And so they're called fixed indexed annuities. A lot of them are not, it's like every other product out there. You have to shop around. Some of them are better than others. And some of the companies that offer products don't have a very good credit rating, so you need to be careful of that. But when I'm looking at the rates of distribution that they'll pay, it's pretty good. It's actually very good relative to current interest rates. The thing about that is you want to, it's going to be higher. So it starts off pretty high, but it doesn't go up. That's why you're still going to need to have some stocks and bonds in your portfolio as well for future inflation. Okay, that's going to be a fixed product. The rates are high. They're 200 to 300 basis points, translated into English, that's like 2 to 3% higher than CD or Treasury rates are right now. You have to commit to it for long term, though. That is not something that you want to do with your money if you need to take the money back out at some point in time. You're really going to use that just to supplement your income at some point in time. Or maybe you just want to pass it on to a beneficiary and you want to guarantee, they'll guarantee a minimum rate of growth on that as well if you want to put a rider on there that does that. Rider is like a little insurance policy that you add to one of the annuity products. So there are tons of them out there. And I'm not going to try to get I can't even speak this morning. Super specific. Say that 3 times fast. I won't get super specific, and just let you know that there are products out there that will guarantee incomes. Depends on your age. The older you are, the higher the income that they'll guarantee, because obviously your life expectancy, and you don't have to lose all the money when you die. Now that's important. There are a bunch of older products out there where you would invest in this. They'd guarantee an income for your lifetime. Even if it ran out of money, they would keep paying you. But if you died a couple of years into it, got an accident or got sick, whatever happened, now they will pay your beneficiaries whatever you have left. And that's kind of a big change. And when you're taking pensions from a big company, you got to be careful on that. Some of the older plans out there still, if you die and don't have a beneficiary benefit on that plan, they'll keep the rest of your money. So you just have to check, and that's one of the reasons I have a job is if you don't know how to do it, you can call me up and I can walk you through the process. We can actually make a conference call to your employer's benefits managers and figure it out. So, which is a lot of what we do there. What am I going to do? How am I going to supplement my income in retirement? That's probably 90% of the things that we do at Bullington Capital. And try to get those plans together, put them in place, and then monitor and make adjustments whenever we think we need to make adjustments. And but to know that I'm watching, we're watching, and that we're selecting these things based on logic and what has worked well in the past. So those are 2 entirely different things. Something that has worked well in the past that's not logical eventually is going to break. Just 30 years of experience there. Something that has worked well and is logical has a tendency to do better in the future. And saying you're never allowed to guarantee returns, but all other things being equal, if it's logical, it makes sense, and it's done well in the past, well, that's about as good as you get. That's about as good as a guarantee that you'll get. And let me give you an example, a really quick example here. Let's say I'm going to invest in stocks who have an earnings yield. That means if you took the profits that they made and divided by the share price, it tells you kind of like, here, this one's paying 5%, this one's paying 3%. Which one do you want? Every time I ask that question to an individual, by the way, would you rather have the 5% or the 3%? They look at me like it's a trick question, and it's not a trick question. I'm being sincere. Would you rather have the 5 or the 3? And, what if the 3 grows to 6 over the next 2 years? Okay, well, then in that case, you'd have been better off picking 3, but you have to have a crystal ball that works to figure that out. Okay, so anyway, I have really rambled today. Sorry about that. If you have any questions, please feel free to call me or email me, Bill at BullingtonCapital.com. Have a good week, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.